Good morning and welcome to this Monday, October 28th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Tell you what, I am excited looking at the action from Friday. The futures are up, 10-year Treasury yield moving, transports beginning to fly, small caps coming back to life. There's a lot to be excited about heading into this fourth quarter. And by the way, today, October 28th, starts the most bullish time of the year historically. October 28th to January 18th. Over the last 68 years, this will be the 69th year. Over the last 68 years, the S&P 500 has finished higher on January 18th than it was on October 28th, 56 times out of those 68 years. Doesn't happen. We don't go down during this period very often. Keep that in mind as we go throughout this next quarter and into 2020. All right, I am going to take the screen and we are going to get going here. Let's start off with what happened last week. You can see the Dow Jones Industrial Average up 152 points on Friday. Still down a little bit from its all-time high that was set back in July. The S&P 500, however, hit a high intraday on Friday of 3,027, currently at 3,022 to start this week. 3,025 is the number. We have not closed above 3,025 ever on the S&P 500. I think we're going to do it today. Futures are pointing up. Last time I looked anyway, they were pointing up. I will get you the latest. Currently, the S&P is up 8.5 points, so it should open up above 3,025. I think we are going to rally, and I think if the Fed does what I think they might do, it could be a huge week this week. I think they should lower 50 basis points. There are some who are saying they will lower 50. Just about everyone is convinced they'll lower at least 25. I think 50 would be tremendous for the market, not because of slowing economy. I mean, the economy has definitely tapped on the brakes a little bit with the trade war and all. But I just think that with inflation not being a problem at all and the U.S. really needing to lower the value of its currency, the dollar, I think that lowering by 50 basis points would do the trick. I think that would help to inflate commodities, really get some materials going, help to continue the energy going, which we've been seeing. I think that would be a boon. And I think the market would love it. Anyhow, the NASDAQ up 57 points. You can see closing above the highs we saw in September. Still got to go up and negotiate that high over 8,300 that we saw back in July. I think that is going to happen this week as well. Russell 2000, this is actually an old chart. I need to switch over to the small caps 600, which I will on the next update. 10-year Treasury yield, though, here does not show today's action. We're up another 4 basis points last time I looked on the 10-year Treasury yield. Right now, you have 4.3 basis points. We're up to 1.84. So we had a good day on Friday, and we are continuing that move to the upside today. If you're not familiar with this, 10-year Treasury yield moves up when Treasuries are selling. Treasuries are defensive. So if Treasuries are selling, the yield's moving up. The proceeds from that selling of Treasuries almost always finds its way into the stock market. So we want this yield rising. Don't worry about higher interest rates. We're talking about 1.84% right now on the 10-year Treasury yield. That is near historic lows. It's okay if we raise a little bit from this level. That'll be the next thing talking heads start, we're going to see the yield move back above 2%, and then they're going to be bringing up interest rates are moving up too fast, whatever. Technology had a great day. Look at this breakout. We're not waiting on the breakout on technology. We got it. We wanted to see technology lead this move to the upside. We're getting that. Materials also had a strong day. We've really seen a nice move to the upside. That could continue if the Fed does come through with a 50 basis point rate reduction. Real estate pulling back and utilities pulling back, both of these on Friday. They're still both in uptrends. This is fine. We want wide participation with the market moving higher. They're both in uptrends, but we don't want them leading on days when we are breaking out or on the verge of breaking out. We saw them actually pulling back money, rotating out of defense into offense, and I think that's very bullish. On Friday, there were a lot of industry groups that did better than the commercial vehicles. I'm going to pull this chart up here. Commercial vehicles and trucks, and then I'm going to stretch this out a little bit. Let's go back a little ways. Just go back a year. If you look at this, this was a big breakout, I think, on Friday for the group. We came up, we closed at 2,069.88. The high that we saw in April was 2,066.60. We got a closing breakout, and if you notice, look at the volume picking up here over the past week or two. I think we are beginning to see a lot of new areas join the party. We've had a really good bull market going in a lot of areas in the market for the past year, 2, 3 years, but the overall market since the beginning of 18 has been going sideways because some areas have not been participating. And so we're just not getting that big thrust to the upside. I think that's changing right now. I really believe that this market is poised for a major advance. I see 3,200 plus before year end. And I think 2020 could be an amazing year, maybe 20% in 2020. I think we could get up close to 4,000. 10-year Treasury yield, we've talked about it here, is the current, as of a couple minutes ago. Let me get the latest. 183.8, so it is up 3.7 basis points right now, breaking to its highest level of October. This is going to help fuel the rally in stocks. If we get through 190, I think that would be a tremendous push back to the upside and be a confirming signal. I'm going to talk about confirming signals in just a bit. Last week, here's a 1-week chart of the sectors. Look what was leading. Energy, finally getting that crude oil moving up. It was over $56 a barrel to end last week. And so that is certainly helping to spur some buying in the energy group. Technology also did well. Look at the 2, 3, and 4. Technology, industrials, financials. That's what we want to see. We want to see mostly aggressive groups pushing the market to the upside. Down the bottom, well, real estate was the worst performer last week. Consumer discretionary, that was a little odd, but there were just certain groups that just didn't perform. You can see a number of areas did very well, but some of the areas that have been performing really well and had been leading the market took a week off. There was some profit taking, maybe a little rotation. Footwear, restaurants, toys, home improvement retailers, all of these groups had been pretty strong, and all of them taking a little bit of a break. We'll see. I think they will bounce back with the overall market this week. But again, that remains to be seen. Talked about crude oil. Here's your crude oil chart. Here in October, we bottomed down around 51. I remember talking about this. Go out, stretch this out to a year. Crude oil bounced right where it needed to bounce. You can see all of these moves down to about 50 to 50 and a half, 51. And right here, beginning of October, we went just below 51 a barrel. Now we're turning back up again. I see the low 60s coming into play here. I believe that we are going to see crude oil before year end back into low to mid 60s. Might be quicker than that, but I think at a minimum by year end, we're going to see continuing improvement in global economic activity. And the anticipation, it's not so much that you see the reports, but it's the market beginning to anticipate that things are going to get better. And I think the trade agreement might have a lot to do with that. I think it's also central bankers around the globe that are being so accommodative. Energy, as a result of seeing that crude oil move higher, we're finally seeing energy move higher. And I say finally, because if we go back into the sector, let me see if I can, there we go, sector summary, look at the scooters. I'm going to sort this by scooters. And then now we'll sort it from the bottom up. I thought I could do that. Anyway, energy, you can see right here, 5.5. Look at all the other scooters. This is how the ETFs are ranked against one another. Utilities, technology finally coming up. I think what you're going to see is technology, financials, industrials, and even consumer discretionary, I think will begin to pick back up again. I think they're all going to begin rotating back up toward the top of this leaderboard as we break out. I would suspect within a month or two, you're going to see those aggressive groups right up at the top. All right, let's keep moving here. All right, I wrote in my blog article just about 45 minutes ago about the S&P 500. Of course, EarningsBeats members have been posting this quite a bit in the daily market reports I send out every day. But you can see the S&P 500 have been in a nice uptrend from that December low. And since then, we have been consolidating over the summer. Everybody gets a little nervous when we pull back, but to me, this is part of the consolidation, which is great for the market. Pulled back beginning of August, came back up, tested the level, went back down, put in a higher low at the beginning of October, and now here we come again. Today, I think we're going to get this breakout. This is an ascending triangle pattern, which is a bullish continuation pattern. It is continuing this prior uptrend, and this measures from 3,025 down to about 2825, which is 200 points. So when you break out above 3,025, the initial measurement would be 3,225. I think we're going to get there by year end. Just my belief. All right, looking at the weekly chart. This is another chart that I posted probably a month ago. It was when we were having this big drop back at the end of September. And I said, if you connect these highs, and I'm going to annotate this just so you can see how this is done on stock charts. Pretty cool. If I take this line right here, okay, so I drew that line in so that I connect those tops perfectly. When you're looking to get a channel, what you can do, I'm on a Mac, if I hit the command and left clicker, I can drag that exact line down here. And you see how that line is lined up perfectly from this low, the low candle body here. We came down at the end of September and touched it. And right at that time, I said, this could be a channel if we reverse off this 2850 level, because look at these prior price lows right around the same level. So there were two things to look for. Number one, the channel, and number two, price support. We bounced right off of it, and look at what we're doing now, turning right back up. Now, if I were to stretch this out, I don't know exactly where this goes to by December 31st, but I think we could maybe be up to that, another 2.5 months out. That could be up to around that 3,200 level, and I think we could be back to the top of that channel. So I am very bullish. The S&P 500, U.S. equities. I'm actually bullish global equities. I think the entire globe is going to go through a tremendous push to the upside. There's so much money in the bond market. If you're wondering where the money is going to come from, I think that bubble is going to burst. I don't think we're going to go soaring higher with interest rates. I don't think money is going to pour out of it. But when you've had billions and billions and billions going into it, as that money moves back over, prices on stocks are going to go higher. Here's the DAX. This is the index that I follow the most closely. It has the best positive correlation to the S&P 500 going back long term. A lot of different indexes have great positive correlation with the S&P maybe over the last 8, 10, 12 months. I'm talking about going back years and years. When I see stocks doing this in Germany, that gets me really excited about the S&P 500. Breaking out to new highs in 2019, taking out these prior highs, beautiful looking price action, great looking PPO. I think we're in really good shape here. All right, let's take a look at a couple of things that could really, and I talked about this in the quarter 3 or quarter 4, I guess, market update that I did back at the beginning of October. And I just want to bring up a couple of these charts because this is what I was talking about in terms of believing the market was going to go higher and the catalysts that are going to take us there. First up, this is a secular bull market that we're in. We went through this secular bear market for 12 years, 13 years. Everybody, when we get a little pullback, wants to go back and say, oh, this is 2007 all over again. Put 2007 and through 2009 in your rearview mirror. I don't think we have to worry about 2007 to 2009. That is a generational type low. We saw that back in the 70s. We saw it back in the 30s, early 40s. And we saw it again in the early 2000s. I don't believe we're going to see anything like that probably for at least another decade. I'd say the 2030s before I'd worry about that. We might have recessions. They do happen during secular bull markets. We had one in 1990 right here. You see this little dip? That was a recession. We had 4 of them in the 1950s and early 1960s. These little blips to the downside, they look like they're little blips. They're 20% drops. They're going to be scary, but they're not going to be 60% drops or 40%, 45% drops. I don't believe that's happening. I think that any pullback that we see in that magnitude of 20%, we may get another. I don't think we're going to get one anytime soon, but we might get one in another couple years. And if we do, it's going to be a great opportunity to get in. But we might be a lot higher before we ever get that. We might be over 4,000 before we get that 20% pullback. So I think you want to be long this market, my opinion. So what are the catalysts? And these were some of the things I pointed out. Number one, everybody's screaming for a recession. Let me just tell you that the only time we have had a recession where the 12-month rate of change in jobs was not negative was back in 1968, 1969. There was a recession here. Every one of these other dips, they coincided with a recession. I don't see any problem right now with the 12-month rate of change in jobs. Unemployment's at an all-time low. What is there to worry about right now in terms of jobs? I don't see it. I want to also go over the transportation group. If you've noticed, and I've been writing about this, when the transports move, you want to be in the S&P 500. 2011, 2012, sideways action. 2015, 2016, really mostly downtrend. When that happens, you can see the S&P 500 tends to not do so well. I actually had another. I want to show you this other chart here first. So here is the S&P. See this sideways, mostly sideways, back and forth action. That's what happens when transports don't participate. When transports participate, this gets back to the Dow theory. When the transports are going, look out above. And this past week or two, the transports have been on fire. I think we are breaking this downtrend, and I think this is catalyst number one that is going to take us a lot higher. The other catalyst that we need to be paying attention to, I mentioned it just a bit ago, 10-year Treasury yield. When the 10-year Treasury yield gets going, here we got going on the yield. Well, here we got going yield. Here we got going here to the upside here. Many of these coincided with nice market action. Late 2017, when we started this big move, that's when we went almost parabolic on the S&P 500 to the upside. Had a little bit of trouble here, and you can see the trouble beginning of 2018. Then we continued moving up, and there went the S&P 500. When we tend to struggle and go sideways is normally when we have these big declines because money is going into treasuries. That's what sends the yield down. When the money goes into treasuries, there's no money available to go into the stock market, or there's not as much. So this is when you see the sideways, the down, the back up, the down, the back up. Over, 21 months, how far have we gone? 2%? 3%? Not much. Look back in 2015, 2016. See this? Everybody was petrified during this period. Money was rotating into treasuries. People were a little fearful, moving into treasuries. Yield was dropping, and we went nowhere. Now, this case in 2013, well, most of 2014, we actually saw the market move up. We didn't fly, but we certainly were moving higher while the yield was going down. I'm just going to stretch this out for 20 years because I want you to see what happens in a secular bear market when yields are dropping. Look at back in 2000 to 2003. See the yield dropping? Anytime we had these steep drops in the yield, nobody wanted to touch stocks. And you can see the S&P getting just absolutely slammed. Look at the big drops in 2008 and 2007 and early 2009. Essentially, they were coinciding with huge drops in the yield. In the current decade, now that we're in a secular bull market, when we have these big drops, the market's not going down. Money is available to come into the market and hold up prices, and that's what we're seeing. So I am incredibly bullish, if you can't tell. I think this market's going higher. I think there's going to be wide participation. I believe transports are going to lead the market to the upside. I would not hesitate, if you're an ETF trader, to think about the IYT or something like that just kind of gets the whole group. You can wait and maybe see if we get the breakout on the transports above, I'll show you the recent highs. But you can see all these tops. I'll go back a year. If you want to get that confirmation, I think it's coming. But right in here, 10.8, we closed above that on Friday. But then you go back in here, you get much above 11,100. And it's going to be hard to argue that the transports aren't beginning to explode to the upside. So I think transports are going to be a great place to be, though. All right, let's take a look now. There were some earnings reports out, so I want to go through and get a couple of these in. The first one is AT&T. So AT&T came out. They did beat by a penny on their bottom line. And I'm going to see if I can get you the latest price in pre-market on AT&T. Let's see. Pre-market up 3.9%, up $1.44 to 38.35. So the level you want to watch here on AT&T, their closing high was 38.47. If they can close above, or if they can open above 38.47, I think that would be really bullish. And we're at 38.27 right now. Market opening in 10 minutes. So we'll want to watch that. Maybe another one or two here. Got a bunch still to go over. This is a jam-packed Monday session for sure. Let's take a look at Spotify. Spotify was up earlier in pre-market. This is a stock that's been down quite a bit. In the pre-market, though, they came out and absolutely crushed their estimates. If Zacks was correct in terms of the estimate that was out there, estimate was like minus 40 cents, and they came in as positive 40 cents. Stock's up $9.32, 7.7% right now. It's up just over 130. So it's going to open up here unless you get a big black candle or a red candle and close back below the 50 and possibly below gap support. Unless you see that, I think this is a very, very positive development for Spotify. One other earnings report I'll bring up, and that is, let's look at Checkpoint. This is a software company. And Checkpoint came out, and they beat their earnings estimate, $1.44 to $1.40. And the stock's up 68 cents to 109. So it's right now it's just consolidating. It really needs to hold on to this support around the 105, 106 area. But I'm kind of watching all these software stocks to see what's going on, because this has been one of those groups. And I would even say that we want to pay very close attention to the support that this group has around 26.25 to 26.50. We did start to rally last week. There's news out this morning. Microsoft, by the way, looks like is going to get the $10 billion Pentagon contract for cloud computing. They have beaten out Amazon. Microsoft in pre-market was up very nicely, and that is certainly going to help this software group. Currently up $3.42 to 144.15. And looking on the chart, you can see that is going to be another breakout for Microsoft. Amazon, meantime, down $7. That's only 0.4%, 0.4%. But it is looking right now at 17.54. There was the gap down on earnings, came rallying back. I think that open yesterday, by the way, is going to hold. So I think if we get another pullback, get down close to that 1700 level, my guess is Amazon will bounce off of that and begin rallying into the later part of the fourth quarter. All right, let's see. Still got a bunch to do. Upgrades, downgrades. Let's go through these really quickly, very, very quickly. I'll just give you a couple of these. First is an upgrade on First Solar. So First Solar is upgraded, and the stock in pre-market action is up 2%, 53.80. Still a lot of work to do, though, here. Trying to get back up through this 20-day moving average. I'd be a little careful until it begins to reclaim some of those moving averages. Roku initiated with a buy today at Bank of America Merrill. And I know Roku was having a pretty decent early morning. 137.25. It's up $3.51. 2.62%. The breakdown here came down below. I'm going to say 140 to 145 is going to be a kind of an interesting area for Roku to see if it can go through. If it gets through that level, we're not far from getting back all those losses in September. Very impressive rebound on Roku. All right, let's go ahead and wrap that up. I want to get into Monday setups. I haven't done these in a while. I'm going to go through these pretty quickly. The first one is actually an active trade alert here at EarningsBeats.com. We have two entries. Our second entry comes in at 90.50. We almost got down there last week. Maybe we get down there today. As I mentioned earlier, footwear had a really tough week last week, so that gave us an opportunity here on Nike. I actually think the support around 90 will hold. If it doesn't, then you've got gap support at 87. That one needs to hold. I would be careful if you go below that level, but I think Nike looks interesting. Next up, TAL, Education Group. Big breakout last week. I wouldn't chase it, but after sideways consolidation like this and a big breakout on heavy volume right there, look at the relative strength all of a sudden soaring. Yeah, this is one I'd be interested in. 40 to 41 would be a great entry. Aircastle, AYR, Big earnings, big volume, great gap up here. Look at this. Another big move in terms of relative strength. This is in the transportation services area, which I think is going to begin to really move higher. You can see on a relative basis, the group is now at about an 8-month high to the S&P 500. AYR is one of the leaders, and after sideways consolidating here for a while, I think this is a nice move on AYR. Interaction Holding, don't know if I butchered the name or not, but it's INXN. Love this breakout on heavy volume earlier in October. Really like this pullback, testing the 20-day moving average and price support. And then on Friday, breaking back out, and look at the volume picking up again on Friday. I think this one goes higher. I like the stock from the current price down to 82.5. Anywhere in that zone, I think, is a good entry. And the last one is a stock that actually we have out right now as an active alert. I really like this bounce off the 20-day on Friday. This is a stock we actually liked as it got down closer to this support area around 30. That's where we got in. Stock got up to 34. I think the stock's got a good shot at 36. That's our target in the near term. This bounce off the 20-day, a close back up above about 34.10 would be bullish here. All right, I am going to move into the 3 you must see. These, I always finish with 3 charts that I just like from the previous day. So I'm going to go into the first from Friday, and that is Zebra Technologies, ZBRA. The volume was picking up at the end of last week, and look at those 3 white soldiers. If you're a candlestick fan, I love 3 white soldiers. Doesn't mean we can't pull back, and in fact, I'd rather get in on a pullback. The stock ran up about $15, $16 just over the last 3 days last week, so it could use a little bit of pullback, but it did close higher than it had closed on these other 2 reaction highs. When I say reaction highs, I mean off of this selling, here's the reaction. Reaction high was up around 219 or 218 and change, I think. Here we actually got above 219 on the close, volume picking up. I think this is a stock that's beginning to show some nice relative strength. It is just at about a 6-7 month relative high versus the S&P 500, and volumes coming in. I think this is one that could run. Next up is Intel. Intel, can't ignore Intel with what's been going on with some of these semiconductors. Lam Research blew it right out of the park last week. You've got others in that space, Applied Materials, KLA Corp. They have been on fire. Now you got Intel coming out. Look at the volume, 60 million shares. And not only did it gap up, but there were more buyers after. That is a really strong candlestick on that kind of volume. I believe any kind of pullback on Intel back to the low 54s, 54 and a quarter or so, would be great entry. I think the stock's going to break out. I think semiconductors are going to break through 3,900. And I think it's going to be a very strong fourth quarter for semis. All right, the other stock that I had was BDSI. All right, BDSI. Here you can see the breakout. And when you look at it there, taking out that April high, pretty important. It is in the pharma space, but look at the relative strength, and especially in October, really the last 3 months have been strong. This stock has been very, very strong on a relative basis. Got the volume coming in to support it on this push to the upside. And when I look at a weekly chart here, you can see that the stock has been uptrending for quite a while, even though pharmas have not been very strong. This is a stock that is making a very significant breakout. The weekly PPO had come down to the center line and is now just starting to turn back up. I think this looks really, really good. So those are the 3 you must see. I do want to just point out for all of you who are new maybe to EarningsBeats, here is the EarningsBeats Digest, Monday, Wednesday, Friday. It's a 3 times a week free newsletter. Put in your name, email address. We'll be happy to send some things along there. Or if you would like, under the About Us, if you can go in here and look at the daily market report. This is a sample of what I send out every day to our members. If you like it, $7. Click here, $7, 30 days. Love to have you on board with EarningsBeats, especially as we go into what I think is just going to be a tremendously bullish period here over the balance of 2019 and into 2020. All right, I want to thank all of you for joining me today. Drop me a line. Let me know what you think of the shows. Tom, you can just send it to tom@earningsbeats.com, tom@earningsbeats.com. Love to hear from you. Everybody have a great day, and we'll be back tomorrow at Stock Charts TV for Trading Places Live. Everybody have a great day. Happy trading.